Fellow governors, distinguished participants, honored guests, it is a great honor and privilege to welcome you all here today. And many thanks to you for those of you who are attending here, of the journey that you had to, and the time that it took for you to get here. And for those of you joining virtually, thank you very much for again making the time to join us today. And a particularly special thanks to Augustine and our friends at the BIS for kindly co-hosting this event. We understand that without you, we would not be able to have assembled such a distinguished group of participants as we have today. This is a special time for us. Next week or so, on December 10th, is our official birthday, and we will be celebrating our 80th anniversary. And I can't think of a better way to mark and celebrate this important milestone than to have such a distinguished and eminent group of people discussing issues that are of direct relevance to us. So on behalf of all of us at the Bank of Thailand, thank you very much for this wonderful birthday present that you have given us. The topic of today's conference is central banking amidst shifting ground. And to set the stage, please allow me to offer a few remarks by way of context about the kinds of changes and the kinds of shifts that we see coming. I can think of at least three. The first shift is the rapidly changing economic backdrop that we face. In a nutshell, the economic backdrop is changing from one of insufficient demand to one of insufficient supply. And the clearest manifestation of that is what we see on the inflation front, where inflation has spiked. Global aggregate demand recovered and bounced back much more rapidly than anticipated from COVID. The rotation of demand from services to goods occurred very rapidly, and the supply chains weren't able to respond as rapidly as we had expected, causing a spike in prices, exacerbated again by the commodity price increases caused by the war in Ukraine. So supply constraints have come front and center, assumed center stage. And there are grounds for thinking that this is not likely to be something that is necessarily temporary. A lot of the stuff that we see is not just cyclical, but there are also secular factors which would argue that supply considerations are likely to be at the forefront for quite some time to come. If you look, the kind of factors, things like globalization, demographics, which were previously tailwinds, supply tailwinds, are now becoming supply headwinds and are likely to lead to price pressures going forward. So the context and backdrop is quite different. The challenges that are facing us as central bankers and the constraints are very different. We're moving again from a world where we had low inflation and we're concerned about zero lower bounds, but now it's a completely different story. We're in a world of high inflation, and the concern now is how the tools that we have, how can those affect things on the supply side. The second shift has to do with the conceptual and analytical frameworks that we use. Increasingly, some of the facts on the ground are contradicting what we might expect from our models. An example of that is what we see again on the inflation front, where things that we used to think were true, flat Phillips curve, doesn't look so flat, causing us again to underestimate and undershoot in terms of our inflation predictions, and suggesting a need that we need a better model and a better way of understanding the inflation process and how to model it, a better way of understanding how relative price changes can transmit to broader and more persistent changes in terms of inflation, how they can lead to inflation dynamics which might be self-reinforcing, a better understanding how inflation expectations are formed, and also understanding what is it that really drives pass-throughs. Another example of the changing conceptual framework, analytical framework that we face is on the financial regulation front. And here, the rapid digitalization of trade and finances has caused the nature of financial services that are being delivered to change. The types of entities that are delivering those services are also different. Where they're located, is now different. So the boundaries and the borders are being eroded, and that leads to possible gaps in the regulatory perimeters that we use to regulate in this space, and raises questions about how do we properly strike, again, the balance, how do we strike the proper balance between innovation on the one hand and ensuring financial stability? What's the right balance to strike between entity-based regulation and activity-based regulation? And how do we ensure adequate competition and contestability in a situation where data and the underlying technology leads to this natural tendency towards natural monopolies and less competition? The third shift is on climate change and the response of central banks to addressing the challenges that are associated with climate change. Of the three challenges, this is probably the most daunting one. It's new to us. There are no precedents, and there are limits in terms of the tools that we have. The toolkit that we have is probably not fit to purpose. But yet, it's an area that is just simply too important to ignore. It's existential. And our response probably needs to go beyond just thinking about the effect of the green transition on inflation or the effect of physical and transition risks on financial stability, and think more actively about what steps we can take to try to influence the willingness of society to address issues related to climate change. The channel, which is likely to be the most impactful one, is through the financial system. So thinking through, again, the kind of incentives, mindset, expertise, and how we harness the creativity in the financial sector in a way that it's geared more towards ensuring that the resources that are available to finance the transition go to where they should go. Central to this is greater collaboration, both among domestic agencies and also internationally, to make sure that the initiatives that are being put forth by the NGFS and other international agencies are carried through. Distinguished participants, Mervyn King, the former Bank of England governor, once said that central banking should be boring. That may have been true someday in the past. It may once again be true, but today it is not true. The challenges that we face are not straightforward. The answers to the questions that we have to address are not obvious. But they will require us to have a steady hand, being able to separate out the signal of what we should respond to from the noise of the rapidly changing circumstances, and understanding, when we should respond and when we should not respond. It will require a sense of humility, knowing that a lot of things that we face are new and that we don't necessarily have good answers to all of it, and that we need to adapt to new situations and new information, and probably requires us to reach out more to stakeholders, given that not all the answers are things that we have, and not all the challenges are things that we have previously are familiar with or dealt with. But it also requires us to stay very focused, first and foremost, on making sure that we achieve our core mandates and try to avoid the temptation to overreach, being realistic about what we can accomplish, and at trying to be sure that we don't try to address goals for which we don't have adequate tools, because doing so, we would risk undermining our credibility. Distinguished guests, I look forward very much to hearing your insights, and thank you all once again for being part of this conference.